Hey there, Tigers. First off, congratulations on becoming a member of the prestigious club of being an LSU alum. My name's Austin Theriot. I graduated from LSU in the fall of 2007, which I promise doesn't feel like that long ago to me, although it might to you. Currently, I work for a company called Arthur J. Gallagher. It's based out of Chicago, Illinois, but I'm here locally in Baton Rouge. And what Gallagher is a consulting firm that focuses mainly on group insurance products. And my concentration within Gallagher focuses on employee benefit programs. And what that is really is I help businesses to create different insurance plan offerings that they present to their employees as a benefit of their employment with the company. So really my goal is to help you guys understand what those benefit programs are. What are some of those coverages that you might be offered? I know a lot of you guys are going out, heading out to your first jobs in the next, couple months or so. And so I really want to let you have an idea and an understanding of what some of those programs are that you might be offered. All right. So, like I mentioned, we're going to be going through, what an employee benefit program is. I remember showing up on my first day of work and getting a packet of information, all kind of different stuff, and I didn't know what the heck to do with it. I didn't know what a lot of this stuff was. And within that packet was, this booklet of different insurance products that were available to me. And honestly, I didn't know what it was. So really, what I want you to get out of this today is just a little bit of an understanding on what some of those programs are, how they can benefit you, and hopefully you can take a few tidbits with you as you head off into the world. So before we kind of get into the specifics on the benefits, I want you to have an understanding of what in the world they are. Employee benefits, what they are, it's a non-cash compensation paid to an employee as a way to enhance their direct compensation. Now, that is a very wordy definition, but think about it this way. You're going to get paid a salary or some kind of wage every paycheck. That is one of the beauties of being a working person. You get that pay every couple weeks or every month or however often. And that's your direct pay. That's what you see going into your checking account. Benefits are a little bit more, think of them more indirect. It's still compensation to you, but it's your employer providing, I guess, their portion of these benefits. They supply some of that portion. They pay a little bit of those plans for you. So that's more indirect compensation. I've seen up to 40% of an employee's total compensation be from different benefit programs. So just know that's that indirect feature is really what kind of classifies employee benefit programs. And there can be all kinds of different benefits. We're going to focus today more on insurance, but the benefit package can be anything from like governmentally regulated benefits like Social Security, financial benefits like 401k or retirement, and then mainly your insurance, your health insurance type programs. So that's what we're going to focus on. But just know your whole package of benefits includes more than maybe what we're going to go through today, and it's all based on this indirect compensation that you receive. Again, so this is what we're going to be going through and focusing on a little bit more today. You might recognize some of these different types of insurance plans. Medical insurance, dental and vision, those are very common, very, very popular benefits. But some of these others like disability coverage, health savings accounts, things of that nature, you may not have a good idea on. So I really want to make sure that you kind of get an understanding on how these plans work. Before we get into the specifics on those, let's talk a little bit about eligibility and enrollment. So I'm a brand new hire. I'm showing up first day on the job, I hear about these benefit plans, when do they start for me? Just know, as a full-time employee, working at least 30 hours a week, you're going to be eligible for coverage. And really, there's typically a waiting period before you would be enrolled in the different plan designs. It's called an eligibility date, or a lot of times it'll be referred to as a waiting period. Typically, it's the first of the month after a certain amount of time. Usually that amount of time is 30 days or 60 days. So for the most part, your benefits will go into effect after your first month or your first 2 months of employment as a new hire. You can enroll any dependents that you wish. This may be more for a little bit down the road for you guys, but your dependents would include a legal spouse or dependent children up to age 26. So you can cover yourself and you can cover those dependents on these employee benefits. So that's kind of your new hire window. You get hired on, you have that month or two waiting period, then your benefits will go into effect. Now, the next point is touches on annual enrollment, or what's called open enrollment. This is a term you're going to hear a lot. You're going to hear it from your coworkers or emails from your HR team. Open enrollment is your one time per year where you can make any changes to these benefit elections that we talk about. Okay, so you're going to be offered them as a new hire, and then every year you're going to be offered to be able to make any changes to your coverages at open enrollment. Typically that happens in the fall or winter for a January 1st effective date. That's usually when most plans renew, but you want to make sure you know that date for your particular place of employment. All benefits that you elect are typically locked in until those enrollment windows open up. So whether the new open enrollment period comes around, whatever elections that you make initially will be locked in, unless you experience what's called a qualifying life event. Now, I'm not going to go through in detail on what that is, but it's stuff like, maybe you get married, maybe it's a birth of a child, things of that nature. Your big items that can happen throughout the year. You have 30 days from that point in time to make any changes to your plans that you wish. Definitely reach out to your HR team, your benefit managers, make sure that they're aware of any qualifying event changes so you can take care of your benefit elections. Some key terms. Whenever I was thinking about what to relay to you guys and what would be most important, these key terms kept coming to my mind because I thought back to my first day on the job. I remember looking at this packet of information and not knowing what in the world I was even looking at. I remember walking into my boss's office and just had him kind of sit down. I was like, hey, can you just tell me what some of these terms mean so I can maybe help understand this? That's what I want to help you with right here. And I want to spend a little bit more time on this than maybe some of the rest of the slides, just so I think if you have an understanding on what these are, you're going to know, you're going to have a leg up when you start to see what programs you're offering at your employer. So let's start at the top. Premium. That's the fee that you pay for your different coverages, your different benefits. This is the amount that's going to come out of each one of your paychecks. Okay. Provider. A provider is a doctor, a hospital, pharmacy, an urgent care. It's called a provider's office. You're going to hear that term a lot as you go along. In-network. This is a big one to understand just the concept of being of an insurance network. So every different insurance that you have, those particular companies that hold those policies have a network of providers that accept your particular coverage. So for instance, if you have a coverage that is only accepted at a specific hospital, you want to make sure that you're going to that hospital and staying within your network, because it's going to be much less out of your pocket coverage-wise in order to go to those particular places. If you step outside of those networks, you'll still get covered, you'll still get seen and get treated, but the financial responsibility that you'll be, it's coming your way is going to be much more significant. Always stay in the network. A deductible. This is your financial responsibility before insurance pays anything. Now, it's a little bit different than your premium. So your premium, you're paying for having the coverage. Your deductible, you're going to pay if you need to use your particular plan. So let's say throughout the year, maybe you have a surgery scheduled. Well, the first kind of layer that you would have to pay is called your deductible. Okay, it's usually between $500 and $1,500 or so for an individual. But that amount right there, you pay before your insurance company really kicks in. Co-insurance. This is another term that you definitely need to know. It's the amount split between you and the insurance company. Okay, so think about it this way. After your deductible is met, maybe for that surgery that we just talked about, that remaining portion of that bill for that surgery is split between you as the insured and the insurance company. Okay, so that split is usually somewhere between around 80% for an individual, 80% from the insurance company and 20% coming from the individual. That number can vary, so you definitely want to make sure you know what your co-insurance split is. Max out of pocket. This is something you need to know. The easiest way for me to describe it is it's your worst case scenario. If something happens throughout the medical year and you have to use your coverage, maybe that surgery that we talked about, or maybe you're in the hospital for an extended period of time, you're going to be looking at a rather large medical bill maybe coming your way. The maximum out of pocket is the max that you would have to pay for those bills. After that, the insurance company is going to cover everything on top of that. Okay, typically a maximum out of pocket on an individual plan is around $1,500, maybe $2,000, $2,500, but it's a threshold to where if you pay X amount out of your pocket for the year, anything above that is going to be handled by the insurance company. So definitely a thing to know. A copay. A copay is a flat fee for a service. Okay, so that service can be anything from going to the doctor's office for maybe you're sick and have to go in. Maybe you go to the urgent care facility. Maybe you have to go pick up a prescription. Anything like that, any type of service you get along those lines, a copay would be a flat fee designed for you to access those type of things. So you go to the doctor's office, they ask you how you're going to pay for your visit. You show them your fancy new insurance card. They say, okay, the fee for the visit today is going to be $25. That $25 is a copay. Preventive services, all medical plans have these included in them. These are the services covered at no cost to you. There's a pretty long list of them. I won't go through them all, but the main one would be like an annual physical. Those are covered at no cost to you, and they're on all medical plans. Pre-tax, you're going to hear this term thrown around a lot. Main thing you need to know about it is most benefit elections that you have will be deducted from your paycheck before taxes are taken out of them. So you get some tax savings for enrolling in some of these plans. Okay, let's talk a little bit about medical plan designs. Main point on this that I want to relay to you is medical insurance is not just like a one-size-fits-all. There are a bunch of different types of plan designs. I've highlighted a few of the main ones on this slide right here. Just know whenever you get that offered benefits, you always want to make sure you know which type of plan you have or have access to, and you want to understand the differences between all of your offerings. On this particular slide right here, the benefits more to the left, your traditional, your PPO, those are going to be the higher premium plans, more out of each paycheck. But if you have to use those particular types of coverage, usually it's a lower expense out of your pocket. So, if you had to go into the hospital or something, and you had one of these traditional plans, it's going to be a lower cost maximum. All the way to the right are your more higher deductible plan options. These are going to cost less out of each paycheck. So it's going to be less premium. But if you have to use the plan, you're going to be paying more out of your pocket. So if you had to go into the hospital and you had one of the high deductible plans, you might be looking at a more of a cost that hits you financially. So just know which plans you're offered and that there are different ones. It's not a one size fits all. But I want to talk about a couple of the kind of the main ones that you'll see. This first example is going to be of a medical PPO plan. This plan right here, you can see some of these terms that we just went over. It has a deductible of $500. So that would mean, if you had to use this particular coverage, if you had a surgery or something like that, the first $500 is your responsibility as your deductible. After that, you can see some of the other things. On this plan, the max out of pocket is $1,500. So that means the max you're going to pay per year for your medical services is going to be that $1,500. Remember, that doesn't include your premiums. This is the max out of your pocket for medical expenses. So if you use your coverage, this particular plan, if something happened and you have to, you get up to $1,500, that's your capped out. After that, insurance pays everything. You see your preventive services are listed there. Some of your co-pays or your flat fees for your service are listed there. Your co-insurance, that's that split between you and the insurance company. So you can see on this plan, it's 80%. The other 20% would be your responsibility. And then some of the other co-pays listed right there. The next plan design that's more common is going to be the high deductible health plan. You'll see that HDHP acronym thrown around some. You can see on this plan, the biggest difference, there's no co-pays. So if you go to the doctor, if you go to the urgent care, there's no flat fee for a service. You're going to pay whatever you're billed at that particular provider's office. And all of those fees throughout the year count towards your deductible. On this particular plan, once you meet your deductible of $3,000, everything on top of that is covered at 100%. So your insurance company essentially, after you hit your threshold of $3,000 throughout the year, your insurance company pays everything. So you can see how this particular high deductible plan, if you had to use it, it's going to be a little bit more out of your pocket, that $3,000, as opposed to the PPO plan where the max out of pocket was $1,500. Although the PPO may cost a little more out of your paycheck, if you had to use it, it's going to be a little bit less. Okay. A couple of the next slides, I just want you guys to just be aware of. I'm not going to spend too much time in detail on them. Healthcare spending accounts. These are more or less savings accounts that you can deduct money out of each one of your paychecks, again, pre-tax. You can use these type of savings accounts for qualified health expenses. And some of the highlights are listed on this slide that I just want you to be aware of. If you see that you're offered these, please reach out to your benefit administrator. Please reach out to your HR team. Make sure you're understanding which ones of these you're offered and how it can benefit you. The next topic is really just one that I wanted to include here because I see it a lot personally. I'll get calls from employees from time to time. Hey, I went to the emergency room for X, Y, and Z, and I got this huge medical bill. Well, I always tell people, and I like to communicate in my meetings with employees, if it's not life or limb threatening, maybe avoid the emergency room if you can, because, and the main reason is, if you go to the ER, you can possibly receive multiple bills for that particular visit. Different doctors may bill you, different facilities can actually be, different providers can be located within the same hospital. So you might be looking at multiple bills, just a higher expense possibly than you would maybe in urgent care or your doctor's office. So I always tell people, if it's something minor, try to use the urgent care, try to use your doctor's office. Obviously, if it's life or limb threatening, go to the ER, but just understand that it could be a little bit more financially significant if you chose the emergency room based on certain situations. Okay, let's talk about some of the other plans, and I'm going to go through these a little bit more quicker than the health. All of these different benefits, guys, are separate. Okay, so medical insurance is a separate kind of entity. Dental is different. There's other options that we'll touch on. It's not like a package that you get. You can elect what you want and what you don't want. And a lot of them are going to have different costs associated with them. But dental insurance, It's coverage designed to really help offset some of the costs for dental care. Different dental procedures can get very expensive when you're talking about, some of the major stuff like root canals and things like that. What dental does is it gives you more or less an allowance or an annual maximum to offset some of those costs. So I included a sample plan design of a sample dental plan right here. Most of them are along these lines, but really can help you if you need some work done. Vision insurance. I recommend looking into this if you wear glasses or contacts or feel like your eyes are getting worse maybe. I personally have one of these because I wear contact lenses, and what it does is it helps offset the cost of some of that kind of eye care throughout the year. You can get your eyes checked and pay a flat fee, and then you get an allowance for certain materials is what they call them, but eyeglass lenses, contact lenses, things of that nature. Again, if you wear glasses or contacts, usually this is a very inexpensive coverage. You may want to take a look. Life insurance, you're going to likely have an offering of some type of life insurance. There are a ton of different types of life insurance. The most common that you'll see is group term life insurance. It's going to be a pretty inexpensive coverage, especially for some of you younger folks, through your employer. And life insurance, it's, I don't want to get into the nitty gritty of it, but really, what it's designed to do is pay a benefit to a beneficiary if you were to pass away, okay? And it's really designed to help, kind of eliminate some financial burden. If if something were to happen to you, as you get a little bit older, you're gonna have more financial responsibility, meaning, you may start having children, you may have a mortgage on a house or something like that. Life insurance can be a way for you to purchase, a certain amount of coverage. And if something were to happen, that money is paid out to that beneficiary to where it wouldn't be, as much of a burden on them if something were to happen to you. So, point being, that's kind of what it is. But just take a look at what you're offered through your employer, because, like I mentioned, at a younger age, you're less of a risk to the insurance company, and it'll likely be very inexpensive for you to enroll in these type of plans. Disability insurance. This one was a little bit confusing for me whenever I first started learning about it. I didn't really quite understand it, but the easiest way for me to break it down to you is disability is insurance for your paycheck. Okay, so what it's going to do is pay a portion of your salary if you're sick, if you're hurt, if you cannot work for an extended period of time. Maybe something happens, and you're out of work for 2 months with no fault of your own. If you have a disability policy, it'll cover typically up to 60% of your pay while you're out for a certain amount of time. Short-term disability pays out, a less amount of time. It's usually about 3 to 6 months in coverage. Long-term disability is typically multiple years. But just know that kind of what it is, how it can benefit you. If you can't work, this pays a portion of your pay while you're out. Those of you young ladies that are listening to me, if you're thinking about maybe, starting a family soon, I highly recommend you looking at short-term disability, because that can help cover some income when you're out on maternity leave. So just know what that is. It's insurance for your paycheck. The last 3 slides that I want to go over are really just more laws or kind of different kind of concepts within the health insurance benefits world. The first one is healthcare reform, the Patient Protection and Affordable Care Act, or ACA. You're going to hear this term thrown around a lot. Sometimes it's referred to as Obamacare, and it did a lot for the medical insurance world. It requires employers that have over 50 employees you have to make an offer of medical coverage if you employ over 50, and that medical coverage has to be a certain qualified amount. Really, it helped you as an employee kind of make sure that you have a certain level of benefits offered to you and certain medical coverages that are afforded to you. So just kind of have an understanding of what ACA is, because this won't be the last time you hear it. Next one is continuation of coverage, or COBRA. I won't spend too much time on this, but basically, if you lose your job, if you're employed or maybe you're in between jobs or something happens and you're covered by medical insurance at one particular employer, maybe you are just changing your different field of employment and you're going to a new job. When your coverage ends at your current employer, that's not the end of it. You can what's called COBRA your coverage, or continue your coverage for a period of 18 to 36 months. You're going to pay the full cost of it, but it allows you to sort of keep your coverage going if you need to. Maybe there's a gap maybe you're between jobs and there's a gap of 3 months where you just need to continue your coverage you had until your new coverage will kick in. That's where COBRA comes into effect. So just know what that term is. And the last one is HIPPA. This did a lot. It's kind of a multi-layered act that was passed in 1996, but kind of the main thing that I want to touch on for you is it's your privacy to your protected health information. So anything medical wise, between you and a doctor, obviously there's a certain level of privacy that's expected. It's the same thing for your health information that may be transmitted through your job or different ways that you apply for insurance through your job. There's a certain level of privacy that's always expected there as well. So just know that's a thing. That's something that you want to know exists. So that's it. Congratulations. Thank you for listening to me. Thanks for going through this Benefits 101 course. I know you're probably just as proud as we all were whenever Joe Burrow was holding up that trophy a few months back. So, I hope that, this gives you a few little nuggets of information, a couple of things that you can take with you as you head out into the world. So I wish you the best of luck. Congratulations again, and go Tigers.